morning, everyone. This is Amit Pawari, founder and managing director of CR Forex. The most asked question by all exporters and importers is what will be the impact of election on rupee. In today's presentation, let us understand that there can be three kind of possibility. First possibility is that BJP and NDA gets close to 300 and more seats, the probability of which as of now looks 75 to 80%. If that happened, then rupee is going to move towards 82.5 kind of levels. BJP gets less than 250 seats. In that case, it will be difficult for them to form the government, but still they will be able to form the government. If that happened, knee-jerk reaction can happen in rupee, and rupee can move towards 83.70 to 83.90 kind of level. To this, the probability is 10 to 15%. If the result outcome is that we have a hung parliament, then rupee might get weaker towards 84 to 84.5 kind of a level, probability of which is close to 5%. This is all future expectation, but let me share you an excellent piece of research which will help you to decide what kind of a strategy an exporter and importer should follow just before election results. In the last 5 elections, rupee has always appreciated after the election results are out. If you see the table, average appreciation is close to 1.85%. Highest appreciation was in the year 2009, where rupee appreciated close to 4.5% just after 1 week of results were out. Now let us understand why this happens. The reason is, once any government comes into the power with full majority, then stability comes into the market and FIIs will start investing in Indian economy after stable government formation is done. So if you see the table, it is very clear that FIIs come after stability is proved. Now, what is the future expectation? The expectation is very clear. If a stable government comes, plus very strong fundamentals like higher GDP, lower inflation, lower fiscal and trade deficit, will encourage FIIs to put money into the Indian equity markets. So in next 1 year, we are expecting flows close to 60 to 80 billion in various form. If that happened, that will be really positive for rupee. Now let us discuss outlook on rupee. On last Friday, rupee appreciated from 83.50 to 83.30, mainly on account of IPO inflows. Corporate were raising dollar funding, and FIIs became a net buyers of Indian equity market. This inflow trend is expected to continue as MSCI rebalancing activity is going to happen in last week of May. We are expecting inflow close to 2.5 billion in this activity. Other factors like falling crude oil price, declining 10-year yield and weakening dollar index are all indicating that rupee is going to appreciate in coming days. In the short term, rupee might consolidate between 83.20 to 83.50 kind of a level, but medium term outlook remains same, that we are expecting rupee to move towards 83 and 82.50 gradually. Last week, my Nifty target of 22,400 was achieved. Now there are two pending targets. One, Nifty at 22,800 and rupee at 82.50, which I am expecting it is going to achieve very soon. Let us discuss strategy for thin margin exporters. Thin margin exporters like agri exporter or chemical exporters. Most of the thin margin exporters are taking costing near 83.25 to 83.50 kind of level, and most of the factors are suggesting that rupee is going to appreciate towards 83 and 82.50 kind of level. So we will request all thin margin exporters that they should cover 100% on a back-to-back basis. If someone wants to wait, they can keep a strict stop loss of 83.25 or costing, whichever is higher. Now let us discuss strategy for thick margin exporters like textile exporters or engineering exporters. The impact of election result on rupee is mostly on the positive side, expecting the same this time also. So thick margin exporters should follow this strategy for coming days. Between 83.20 to 83.40, they should ideally increase their hedge ratio. If they are hedging against confirm order, they can maintain a hedge ratio close to 85 to 90%. If they are hedging against anticipation order, they can maintain a hedge ratio of 65 to 70%. Now let us discuss strategy for importers. Importers should only focus on covering near-term imports. 50% of the net payable which is due within next 30 days, they can cover near 83.25. For remaining, they can wait for 80 to 90 to 83 kind of levels. With this, I will end my today's presentation. Jai Hind, Namaskar, फिर मिलेंगे next week. Thank you.